Meaning I can find, like today, more ideas, but it takes so long to figure out, which strikes, how far out.
That's true, but you also know the answer. If you find a nice directional, we'll just hit the mouse. But that's a tougher, discussion right now on directionals.
No, we'll find directionals. All depends on your comfort level and where you want to put a stop.
Well, look at Sanjay's run. RUN is a swing candidate. It's extended on the
Run
month.
didn't look good last week, but I've looked it over the weekend. We'll see what it looks now. But I'm going to come across so much stuff, even to have discussions. We could be here until holiday. We start cooking the burgers on Wednesday, and there's just so many things. Look at this. This looks great as a swing. You could wait and say, I want to wait till tomorrow to buy it, but you can buy it right now. If you want, you can stop out half below the low, or I'd probably, I'd put my stop, maybe it's, somewhere down here. There's no support. But it's a nice setup. It shouldn't break below the 20. You could say if it breaks the 20, I'll bail on it. But there's just one idea. I've got tons of them. Ready?
Yeah, I'm going. Yeah, I'll write them down here in my other ticker as we go through them.
Okay. What's weekly, daily? Okay. I'm not crazy for this, but it'll probably reverse. Intel, I like. We like things with more of a base, but I think this is more of a swing trade, probably than a put spread, unless there's juice under the 200.
Well, we are already short the naked puts in the weekly trader.
Okay, so this is probably good if you're to take this overnight. I'd wait till later on, and probably you'll move up tomorrow. If all these reversals are going to hold here, so far, I think they will, just based on the internals that we've discussed and seasonality. I think these will be good candidates, even something that's been beaten down like this, to move up tomorrow.
Your XLK looks good too.
Yes, we're going to look at that. This is surprising because Wells Fargo, this has been the bad boy, being in trouble. And look at this one for a put spread that it gapped up. It gave it up like a lot of things did on Friday. But look at this reversal today. Now it's got a nice bottom under 53.
Yeah, I'm looking.
Don't like it. Twitter, I like it. Actually, I kind of liking this for a swing. I see the hourly is still chopping like that, more like a bull flag scenario. But look at the retest of the bottoming tail and the reversal today. So I like Twitter as a long. And, I don't know, Dan, I think maybe this even, I don't know, an outright call option on this could, based on the seasonality and such, maybe this thing's going to get going because it didn't get smashed like a lot of the other stuff.
I agree. All right, I'm writing this down.
1 second, I got to sign some things here. It's today's 7/2. This is my second thing. The dog is getting crazy. Okay. Hello, Andre. You're still here on YouTube and you're not with us in the room. I'm got this going on YouTube here. I was signing some documents. Okay, so Twitter, I like. This thing's moving up here, breakout. I wouldn't know what can you do with this. It's either directional. I don't know, probably not good for a put spread. Nice move today. Tough one. Microsoft, Dan, put spread. It's got juice under these lows here. Got 5-6 days here of probing that area. I don't know that how much the upside it has, but we just needed to hold these lows. All right. Apple getting interesting. No, I don't like that. No.
Microsoft. Let me check earnings because the Julys are juicy. So that's telling me
719.
Yeah.
It's coming. Yeah, we're getting there and closer to.
So I'll check 2 weeks out. Well, you can do a $3 wide for 2 weeks for 38 cents on Microsoft.
Let's see if we can find stuff that's going to expire
this Friday.
CRM, nice.
Yeah, you mentioned that this morning. Yep.
SQ. I mean, start laying out a lot of cash, but these are buys.
Well, that's fine. It's up to, we're just giving compelling ideas and it's up to them to see which ones they like. No juice on the puts on Square, so yeah, you just have to buy it.
LUV. Got a retest here. Nice day today. Not LUV.
Yeah.
LUV.
Yeah, I like that support.
Weekly retest.
Low for 2 weeks, put spread 35 cents or 30 cents for a $2.50 wide. It's just, another trade.
Well, I think it's good. I mean, yeah, I think whatever, if I'm stopping and mentioning it, I think it's good. Now it's just see what happens. So these are all wide range bar scan. And let's look at run. You said Sandra mentioned run. That's nice. That should have been on a watch list today. Pull back to the 20. Yeah, come on. Too much. Too far pulled in. UAL. These things are always kind of hard to tell if they're ready to go. I mean, it looks so good. Look at this gap up and this consolidation.
Wow, it sure does.
I think, you know what?
Wow.
You know, if you're willing, I would just put in a buy stop at 110.05 and just leave it there. Probably, you know, we could put it in tomorrow, but the thing could just rocket to 115.
And a $5 wide put spread is 60 cents right now.
Okay, what, like a 105, 100? No?
Yeah.
Yeah.
We could give both. Just put this one on right now.
Yeah. I mean,
and then buy the stock over that.
yeah. Earnings are well off. There's your shoe store, Dan. You ever go in one of these stores?
No.
They must have thousands of shoes.
All right, filled on DRI at the midpoint, 60 cents.
It's glue again.
You're sniffing what?
Glue. Did you build models when you were a kid, Dan?
Yep. Yeah, I like making them of airplanes, believe it or not. Or you should believe that.
Yeah, I used to build them out of the cars. IWM, Dan? Either a put spread or something expiring this week below?
Yeah, let me look.
What is? 160 and a half, only 27 cents. 161, 35 cents. And Thomas has clearly enjoyed the glow. All right, Prayer Kid, we're waiting for you. Talking to somebody on YouTube. All right, let's wait. Dan is typing up some stuff.
Yeah, so you checked IWM and not enough juice, right? I mean, yeah, I didn't even look at it yet. But 27 for Friday. I checked XLK and it wasn't that juicy. But you know, these FANG stocks are typically juicy, so you know, higher risk, higher return. I like Google. Google's still a valid trade in our advisory letter. The entry is over Friday's high. But that's so we have an open trade. Well, we have an open trade recommendation that hasn't hit yet, but it's still okay because meaning the following. This is a big run getting climactic, so it's very likely if it takes out yesterday's high, which it's kind of threatening, or Friday's high, which is threatening, that it'll pull back on this time frame. But I always give a limit entry based upon the closing price, so I don't, you know, take too little of the money. So many times on the retracements is when we do get filled. So that one, I'm not, my point is I don't need to change anything. It's fine the way it's written.
All right. Spiders, that's a pretty big run into that gap fill there. You can see the chart bottom left there. Things are likely going to stall here. No extremes in the tick. Interesting.
Our CNX gave us a little pain today, but still fine. Dropbox slopping around, but fine.
We were doing futures here. We'd scalp this short. You can do that with the futures. They ticks that up. Don't have to have a huge move. let's continue here. Are you all convinced that it makes sense to watch the wrong way options traders? I've just seen it so many times. I don't even know why I doubt it for a moment when I see it.
Well, but just add to that, meaning you wouldn't do that alone, would you? Unless at least one of the other internals were also in alignment, like Brett was.
Well, the breath was just touching. It was right there on, it was there, but I mean, it's almost there. I've seen it so many times, and you never approach doing anything like that in the market, but it's almost like I just feel like just do it blindly, buy any collapse because it'll work, It's just amazing. It's amazing. I mean, I've been looking at it for so many years, probably decades, and it's just, my God, how could they not be looking at it to know when the odds are so much against being on that side?
Because nobody told them.
No.
It's like you always say, if you don't know, you don't know.
Right.
And it's difficult until what do you say? Until you do it and learn it.
Right. So that is the way. VeriSign, another nice turn.
Yeah, let me look. Yeah, I like that because that is a price void. Take a look at our T2. I was tempted to give that early, but similar to the Google, that's still a valid trade over Friday's high. And since we have a limit, we won't get filled unless it triggers and then pulls in.
Let's see how things pull in here. What time is it? 2:40. Let's see if this pulls back into 3 o'clock or so. There's some support right here in this area, the S&Ps. How about, let's take a look. Someone asking me about T2. I imagine it probably looks good. Yeah.
Yeah, we have a puts. Yeah, that's the one I was just talking about. We have a put spread over Friday's high, but then with a limit. So we'll only get filled if it pulls in a bit.
It's holding here. There's so many things right now. I mean, like I said, when I first started talking, I mean, it's one of those times that it's kind of overwhelming. If you let it become overwhelming, of course, as to what you're going to pick and choose. But there's so many reversals. They have to go up. How much? I don't know, but Tim, what are you doing in there, Tim? Talking to Tim and Nice Tim, yeah, in YouTube. There's tons of patterns like this today. These reversals that gapped and reversed. Look at that, nice little breakout there, late day breakout. Let's look at. Let's just go to the technology ETF.
Yeah, Wix looks good.
And Twitter, all right, the ones we've looked at already. Oracle, VeriSign mentioned. This thing just keeps going sideways. Doesn't know what it wants to do. I fell a little bit too hard. R-hat. T2. NTAP, that looks like it's ready for new all-time highs.
Yeah, we mentioned that this morning. Yeah, that's
nice.
All right, Wix is okay on earnings. It's a little spready, but we can do but this is for 3 weeks. The 95.90 is juicy. It's 70 cents. What are your thoughts on 3 weeks for these trades?
I don't know. I have a hard time getting past a week. 3 weeks.
Yeah, VeriSign. Let me look. Yeah, I mean, the problem is so many of these don't have weeklies.
Mm-hmm.
VeriSign 135, 130 is juicy at 75 cents. That's 15% of the spread width. But I think, I think you just got to manage in between. We rarely hold things to the end.
Right.
And then if this pulls in a few cents, we'll probably get 80 cents. Oh, T2, I actually gave him an early entry. I gave it over 119.40. Here, let me, for those of you who don't subscribe to the letter, that I'm just giving you a trade there.
See those S&Ps try and hold that little area there against the bottoming tail? There's that little support that was there. Now we'll see if it tried. How much more it comes down here. This is a tricky one. But it's into the gap fill and multiple days hanging in here. It looks okay. That's a put 8-2 August. That's a put spread.
Oh yeah, no, we I was trying that on Friday to sell a put there, or last Thursday and or maybe Thursday and Friday. I was trying the way out of the monies. I think 200, 195 for 55 cents. Yeah, I'll look again. I'm writing this up.
There's a swing for a couple of days for an extended one. Got some support area. I like the hourly. Here's another example of multiple days making the reversal versus just a one-day reversal. You can compare the 1 day and reversal, and sometimes these do go up. Like you get a climactic with a bottoming tail like that, and they pop up. But the hourly is always going to be in a downtrend. So now we've got the retest of there. So you got a W type of a base on the hourly, which supports a larger move. And, it's still in a downtrend. So, you look at it as a 1 or 2 day trade and see ya. DSW is starting to move. Nobody's buying shoes. It's a little extended here tomorrow.
Yeah. No, I like this end tap. I would have no problem holding put spread on that, but also a directional. Compare the relative strength of that to the market.
Yeah.
$76.72 is 52 cents. Yeah, I think we can do 2 trades there.
Yeah, Bitcoin made a big reversal, Tim. Tim, you mentioning what you follow, Dan, GBTC.
Yeah, but also someone in our room told me about, check this one out. I reviewed them both this morning. Echo, Tango, Charlie, Golf.
Erythium, that's the other one.
Right. And that's what I was saying. It could be, this one could be a kamikaze trade. And I was, defining that for Sanjay this morning.
Yeah, at least this one's got a retest where the lows are relatively close.
Right, exactly. That's what I said. And I said, hey, you'll be bragging to your friends. I said, it's still in a downtrend. I don't know if it's going to hold, but if it makes its way back up to $55, you got in on the basement floor. So we should watch it
Tomorrow. This is a pink sheet.
That's impossible, or else I wouldn't.
That's what it said.
Oh, okay. Yeah. But why? Okay. I'm just confused of why I'm getting.
It says pink here.
All right.
Well, you probably get quotes.
Do you know why? Yeah, that's what was confused me. Do you know, do you know why it's called a pink sheet?
You have to watch The Wolf of Wall Street.
Because they're pink. They really are. Do you know why it's called, the Fed has its beige book?
Must be beige.
You got it. So yeah, I don't ask complicated questions all the time.
Yeah. Why did they call it the beige? Why did they make the book beige?
Because I
don't have any bid ask on this.
Well, because I didn't want to confuse it with Kelly Blue Book on the values of cars and boats.
Yeah. Well, the Kelly Blue Book, the cover's blue, but yeah, those Bitcoin futures, nobody really, I mean, when they move, I guess wherever they have to move with Bitcoin, but nobody's really that interested in them for trading. They don't trade much volume. Pretty much everything's stalled here. Let's see what happens tomorrow. All these turns would suggest a gap up. And if they gap up, they probably come in. But if they gap down, we should buy. As long as it doesn't gap down too far. needs to, well, it's still a little early. All right, here. And we'll see what held up or how they held up when it gets there. Okay. There's plenty of stuff out there as far as tech goes. Hey, Pat needs a low-priced stock.
Glue.
Glue looks good. All right. No biotechs. Wow. That's not bad for a $2, $3 stock with that monthly. Look at that volume. Roadrunner Transportation.
Oh, I like the weekly 2-bar reversal.
Yeah. Yeah.
Yep, I like it. So I mean, we're in the green room, so we can do this, and we just give an hourly buy setup.
Well.
Or tomorrow over today's time.
Or just buy it with a stop under today's low.
Right. Well, of course. So we're just talking different ways to leg in. But yeah, of course, on the stump.
And you would think it would have an inside day, but who knows? Looks good. Climactic, sideways, 180 reversal, wide range bar.
How are earnings?
They probably don't have any earnings. September 27th. One second. Andre's saying EEP. Yeah, that looks good. Coming out of the base there, cleared the initial resistance. Surprising that it's starting to move. You know, oil stalled, and a lot of the oil stocks are kind of iffy here. This one I would wait till tomorrow. Clear the high. Might run a bit. Yeah. Short pizza. Yeah, that looks like a good day trading short setup. Starting to break. What's the 5 look like? Could be a little bit of a trap, Tim, right here. See if it goes sideways a little here for the next leg. It's a little thin. Top of John's. It's amazing how big a company could get selling pizza. news there. I think you have probably need to have a news feed for these junk things to see possibly what's driving them on the day. I know. Kind of like this one. XPLR. It's up at resistance, but nice daily move.
Yeah, trade's kind of spotty. It might be low volume.
Well, yeah, there's low volume. The bio. Too thin. And well, we could sort them by volume. There we go. This is the one we were looking at a couple of weeks ago, the marijuana stock. Couldn't get through that high and fell all the way back down. Week still looks all right.
Ah, yeah, that stopped us out break even.
Well, set alert. There's Roadrunner. Right? When something makes you stop and look at it twice, something must be okay. Well, the thin one doesn't have the void, but wide range bar today. A lot of biotechs, small stocks. Great. What time is it? Right, so markets have pulled back to about where they should stop. Just scanning, Evan. Honestly, they probably have, I would imagine, a lot of brokerage accounts. It seems to be primarily options that they focus on. I don't even know if you could trade the underlying through TC2000. But no, I just use it for scanning. It's great for scanning. This is actually a gold account, Evan. It's and you pay for the real time. I had the platinum, but then I figured what really wasn't worth it for me because I didn't really need the scans to update in on their own. If I just switch from one tab to another, they update. I don't, it's not like I need to watch the scan fill in like whatever. Like these scans here that are scanning daily charts, whatever. I just refresh it and see what comes in, and then where's my other page? This one here. I think these are intraday, so I can just refresh it and it works perfectly for me. So we're playing with another page. Is it this one? No. Yeah, this one here. I started building this page or adding to this page for intraday longs and intraday shorts. Dan, what is your official someone on YouTube asking me, Dan, what is your official mathematical definition basis for juicy options to sell? Been trying to hone in on that lately. A mathematical definition here.
Well, I mean, you know what we go for, but let me just review it again. So everything starts with a compelling pattern. So that allows us, and so it has to be out of the money. A put spread under support, call spread over resistance. But the rough rule of thumb, and it's not a certain mathematical thing because it depends time to expiration, but let me explain. We're always looking for a minimum of 10% of the spread width. So if you have a $5 spread, I want at least 50 cents, right? But that same 50-cent credit is not the same if I give you 10 bullish patterns. You might say I like number 3 and 7 the best, and that if the other ones are okay, but I want 15% of the spread width. So we kind of make a case-by-case determination, but when you hear us say all the time, whether something, wow, that's juicy, it's because we're getting paid so much for the perceived risk of the trade, which we view as, very low, and we're getting paid for it. And that's also why we like high premiums. So that's, high implied volatility leads to high premium. Secondly, that's on a spread. If we do them naked, again, out of the money, under support, rough rule of thumb, and you got to put it through that filter I just said, because also that 50-cent credit is different if I have to hold it 4 weeks or if I'm making that in 5 days or 7 days. Huge difference, right? So I hope that helped. But on the nakeds, I want at least roughly 1% of the strike price. So if I'm selling $100 put for 3 weeks or less, I'm wanting at least $1 for it. So that is my answer for you. Spider's perfect retracement here, Greg.
Yeah.
Let's,
yeah. When you say 10% of the spread width, I mean, we almost always look for something that's the spread widths are usually many times 10%
or more. That's why I answered it. So go look at Microsoft, go look at IWM, go look at Intel, and we can try to put on a $5 wide and tell me what you get. You ain't going to get your 10%, because Microsoft's more of a Wall Street darling, a slug. It's not a higher volatility FANG stock, but we will get it in the FANGs.
Well, let me tell you what's interesting. I've probably heard you say that, who knows, tons of times. For whatever reason, it didn't register, like stick. This, I know you've said 10% of whatever. I mean, I really didn't pay attention. So I just look at the options table, and I can't explain how, but I know, does it really make sense? Is there the juice there? I don't know. It just looks like it's worth doing.
No, right. But you're saying you're looking at the option table, but let me clarify that answer. You're looking at the amount of money of the credit that's going to go into your pocket for the perceived risk of that setup.
Right.
Correct. So if I give you the same trade on identical setup, and one's Microsoft and one's Apple, you're going to get paid more on Apple because it's higher volatility stock. Unless Microsoft's in the news or whatever. But look, let me look at Microsoft right now, and I'll give you an example. And I just looked at the 269.5 puts that expire tomorrow for spiders, and they suck the juice out. That's only 20 cents bid. So do you want the overnight risk for calling today's low in the spiders, or would you rather focus on these individual stocks that we just built a beautiful list on, the NTAPs, the VeriSigns, the IYT, the DRIs, etc.? That's where we're getting our juice. And I shorted the spider puts this morning for 19 cents a share, but that was for a day trade. Whereas if I put it on right now, I'm only getting another penny for the overnight risk. It's not worth it to me. If it were 60 cents, I would be all over it. All right, I'm looking at Microsoft. So if we do a Microsoft Friday, 97. So yeah, just look at it. The 97.5 puts are 18 cents. So what's 1% of that strike price of 97.5? The answer is 97.5 cents. And I just do the math in my head. So 18 cents is only like 2%, 2.25%. I'm sorry, 0.25%, a quarter of 1%. So it's nowhere near my 1%. So to get the juice on these slugs, you either have to go tighter strike price or further out in time, because I can get this number bigger by definition by going further out in time. That's a mathematical certainty. That's what time decay is. More days to expiration, more time premium. So I can jump out to the 3-week expiration, 97.5, and it's $1.50. Oh, but that's because of the earnings, so never mind. It's not a good comparison. But let me go to the week before. This will still work. Let's go to 2 weeks. The 97.5s are 61 cents. and that's 11 days to expiration. So you're getting paid more, you know, for that one, but you got to hold it longer. You have 11 days worth of risk versus 4. GNW. Wow, that was one big old gap up. There's still air below Sanjay. I would prefer a double bottom because, you know, there's a chance that triggers and it still takes out that pivot low. Hey, I like your ePay better. Did you look at that, Greg?
No.
Look at that. Sanjay is quite the scanner. Look at that. Consolidation, a few false breakdowns, rising 20, wide range igniting to new highs, relative strength. I'll put that in my list for tomorrow to watch. And then, you know, I'm talking to whomever. Our patterns, then we decide, like on this ePay, you say, do you want a directional trade because you want to get paid for your directional bias, like we were saying with the DRI? We gave 2 trades. We gave a put spread immediately. And then we said, hey, if it takes out, you know, over whatever it was, buy the stock. It's a directional, it's both. But since I love trading options, then I'm always, if I like the pattern, looking to see what I can get paid on a put spread, because it's easier. I make money through time decay, or if the stock goes up, or if volatility contracts. Those are the 3 ways you make money on selling put spreads. And so the 50s here, so to that listener, okay, so selling the 50, $5 wide, 50, 45 put spread on ePay, EPAY, I would have to sell the 50s to get any juice. Otherwise, the 45s are 0 by 15. So the put spread is 45 cents, but I wouldn't take that trade for 2 reasons. It's not my 50 cents, even though if the pattern were great, I would massage it and take 45. But here's the problem. The $50 strike is too tight. It's not giving me, it's not the proper strike price under last week's low that I would want to sell a put spread on ePay. So thought I'd throw that out there as another example for you. Coup. I don't know if it's ready today or tomorrow. And notice the price void, Sanjay, is not as big to the prior high. I don't know if you're trading this, you know, as a swing, anticipating another new all-time high, or if it's a swing trade like our VeriSign that just has a nice stabilization and price void to go up for a couple of days. So, you know, your expectations and what type of trade it is to you is also a factor, and also affects our opinion on it, you know, to assist you. So that's why Greg and I like to always keep reminding folks and you know, we'll look at any symbol. That's what we do here for a living. But if you can, you know, add just a little bit of thought of what you're thinking, meaning, hey, Dan, what do you think about this for a July put spread? What do you think of this about a 3-day swing trade? What do you think about this for, you know, gap and crap day trade? Because we're going to have different answers depending on what you're thinking about it.
Sanjay, that's not your typical thing you come up with in your scans. That's sloppy. I mean, compared to a lot of other stuff that we find today, I mean, this daily isn't very attractive. Whew. Wow. What a move. A couple of days. They must have cured cancer. This is kind of interesting, being at support, or the area of support on the weekly here. A good day makes almost everything go up. 5 minutes. See, Dan, when I look at these, other than your 10% spread rule, I look at the chart and I say, is $48 got any juice in it? This is 11 days, 16 cent, 19, not worth it.
Right.
You have to think about the spread.
No, okay, but wait. But see, that's a circular argument because you jumped to the conclusion, and the trader asking the question was, in your head, what made you conclude that 18 cents has no juice? That's what he's asking. And I gave him my answer, so give him your answer now.
I just look at where I don't want it to go, and is there any money there?
Oh, but you still aren't answering it. How do you know if there's enough money there?
Because I would have to sell this for 17, 18 cents.
And why is that not good enough? That's what he's asking. What number would make it good enough?
Well, if I'm going to do it as a spread, I don't think anything would make it worth, because it's just like unless I was going to put on some huge size, to take in that amount of money, it's not worth me paying attention to it. Because the spread, I'd have to go like, okay, whatever wide would be.
Right. Correct. Right. So that's why I have come up with those guidelines, and I think they work pretty well.
So, I mean, even starting with the idea of 50 cents and looking at the closer strike being 18 cents, it's a no-go right from the beginning.
Right. And that's right. That's what I do many times also. Unless it's just so overwhelming and, we don't worry about the capital per se, because, I'm not going to fight if something's not 10% or 10% of the spread width, but it's 8%. I'm not that strict to say, oh no, I'm not taking that. Well, on a 10 lot, $5 wide, that's still 40 cents, which is $400 on a 10 lot. So if it's a no-brainer to put another $400 in your account, of course we do it. But
when I look at this, Dan, from my perspective of just looking at from, just trading a spread, and I say, where don't I want it to go? And I look at the price and decide whether it's even worth my while to consider it for the time. All of this other stuff, these numbers don't mean a damn thing to me.
And that's fine. And he didn't ask that question, right? So we're still.
I know he did. I'm just,
No, I agree with that point too. I don't look at those either. I don't either, Greg. I mean, but I teach people what they mean. And so when, we obviously prefer high volatility, which we know is going to be high in two circumstances. One, if the spiders are selling off and everything's getting jacked up. Or number two, the individual stock is selling off or has pending news. It's if you're Steve Wynn and you're on the cover of all these magazines because you got in trouble with philandering, then your implied volatility is going to go through the roof. So I don't either. So we're all about the juice, baby. If it's just an income trade, we want, we've talked about it. We want the juice for the confidence in the pattern and for the holding period. That's why we absolutely love day trades in selling either naked puts or put spreads. I mean, I do nakeds on expiration day with zero risk because the spiders ain't going to get halted and gap down $5. And my stop's in place like I did today. I went off to the gym, had a stop in place, and I don't need a spread. It's either going to expire worthless or it's going to hit my stop, and I have no overnight risk.
I mean, even this isn't a base, so I'd be looking for here. These are basing, and so I'd have to find something that I thought would go up. So over here on MU, let's just let me put this over here. $4 days to expiration. $53. I mean, just generally speaking, if I'm gonna play this directionally based on a basing scan, something that would be strong already, that I would buy this for a day trade, I could then go here without knowing, I'm just saying, people who talk options, they go, oh, you have to have this delta and that data and da, da, da. And I just look at this and I like, well, you know what?
And what about
if I'm buying something at or in the money, it's going to go up.
And what about row? What do you want that to be?
I don't even know what that is. So I know who row is, but I don't know what row is. I know who row is.
It's the interest rate component, right, which I don't care about.
Okay, so where did my table go now? Darn it. Why did that move? It's back here. So I picked something like at $52, whatever, thereabouts. And there we go. I mean, I could have bought it on a day trade. So as long as I'm not thinking, if this thing doesn't work out as a day trade, I'm going to hold on to it. It's just, it is what it is. And I'm going to say, I'm going to buy this and kill it if it trades under this low. If I did the option the same way, I probably can't get in and out as fast as I could trading the stock because it's very liquid. But if I did that, I made decent money. It's got to go up with it. So, reiterating my point, all of this stuff here doesn't mean a damn thing to me.
And if you've sat through, my seminars, which I know you have, you will see that I don't teach that either. You look how many we put on a trade. It's setup, juice, action, manage. So the same way, but I'm a teacher, so I have to tell them what a delta of 80 versus 30 means. And I have to tell them, so no, we're on the same page. That's our specialty, Greg. You just summarized our specialty. It's just overlaying simple option strategies with the charts, and that's it. It's either income or directional.
Right. But when they start getting into these, what do they call it? Uneven butterflies and
unbalanced.
Unbalanced. I mean, all of this stuff is like, why bother? I guess. I mean, it's just not something that I would want to do, but people do it and they do it successfully. But, I always look at things from the point of view, why complicate this stuff?
I mean, right. I mean, we obviously stand behind what we teach and do. So this is the master trader method. So, everyone has different flavors of cooking, of exercise, whatever. Now, I know some option traders that they're looking for greater spread width than I am. So let me just add one caveat to that, just so you know why. They're like, oh no, Gibby over there is selling spreads with only 10-15% of the width. Is he crazy? No, because our probability of success is so darn high. But mathematically, by definition, if you're going to try to get 50% of spread width or even a third, so like you do you can play with the quotes yourself, and you could just say, okay, if I were to sell a $10 wide, or let's make it the math easier, a $3 wide put spread on the spiders, what strikes would you have to sell them at for you to get a net credit of $1 or more? The answer is you would have to do them at the money or maybe even in the money. So you have zero cushion and you have a significantly less probability of profit than we do, but your maximum gain is greater. Of course it's greater because you took in more money at the starting line, but that has nothing to do with the probability of success of the trade. So I hope everyone followed that little tidbit addendum. So no, we don't, yes, we have guidelines and rules, but we aren't that anal about it. We, as Greg and I believe, tell me what you're going to pay me for putting on that spread. It's like, it's like buying insurance, and that's all we're doing. What if, anything? What if your next door neighbor, Greg, said, hey, Greg, will you give me an insurance policy on my car? I mean, we're businessmen. You would probably say, well, let me do a background check and, this and that. But the important part is, what are you going to pay me? And what if he says $100? You're going to say, you're out of your mind. Go call Liberty Mutual. But what if he says, I'll give you $5,000?
What if he said, I'll give you $100 for the next minute?
Well, provided he's not suicidal, then that might be okay. But yeah, so it's that simple. The option table tells us what will we get paid for assuming the risk of calling a turning point in the pattern. It's that simple. And then it's what you just said. It's the time component. It's making $400. Is that for 3 days or 3 weeks? And then give me those two answers. What are you going to pay me? And how long's the policy? That's it. That's all we care about. And to make sure there's no earnings, pending event.
Right.
But that's it. What are you going to pay me? How long is the risk exposure?
All these brokerage stocks are they're kind of interesting as far as just climactics. IB, look at Schwab. It's E-Trade. ETRD? No. It's E-Trade. Yeah. I can't remember. Lita's Morgan Stanley not going to get up to $60, Dan. Right? Wasn't it Morgan Stanley?
All right, let's look.
Definitely not.
Ooh, I don't like Morgan Stanley. Schwab is getting close. You remember Jeffries?
Mm-hmm.
Nobody talks about doing business with Jeffries. JEF. JP Morgan's ugly. What's E-Trades?
ETFC.
I changed it. No, I don't like that. So Schwab, it's still at the bottom range of that ugly red bar, but, so that would be our question. Again, how much am I going to get paid and for how long?
Right.
But I'll still look at the juice to see if it's worth watching over the next day or so. Because with the sell-off, see, I don't go look at volatility, but I guarantee you volatility's been rising on this sell-off. So 4 days to expiration. The 50.5 is 25 cents by 40. So that's pretty good juice. Now say back to my 1%. What was that guy's name who asked the question, just so I can identify him? Evan. So if you're still listening, what's 1% of the $50 strike? 50 cents. So if I could get, selling this naked, if I could get 45 cents or 50.
Which stock are you talking about, Dan?
Schwab.
Mm-hmm.
For 4 days of risk, and it's really 3 days of, it's really 2.5 days of risk because of the holidays, if you know what I mean, but it's still, 4 days, it still expires 4 o'clock on Friday. But that's juicy. That's close to my 1% for this week, as opposed to 1% of another stock like Microsoft, or a slug stock, Procter and Gamble, where you would have to go out 3 weeks to get that same 1%. But no, I'm not doing that. I just wanted to add that commentary. So, wow, our CNX turned green after giving us some pain this morning. Oh, now I just saw your interactive broker. I like that one the best.
Told you before.
No, I know. I was getting water. I just heard you say climactics on brokerage firms.
But the options, they don't have weeklies. Kind of weird, the options on that stock.
I mean, there's a lot of stocks don't have weeklies. All right, so where's our support? Same drill. They don't have even dollars, which means we got to drop down to the 60s. And so the 60.55 is 37 cents. So see, here we go again. It's spready. So let's say I could get 40, and that keeps the math easier. So that's 0.8. I'm sorry, it's 8% instead of 10% on Interactive Brokers, July 20th, 18 days to expiration. Out of the money put, 60 short strike price. But the stock's trading at 64.92. Let's just round up to five. So we have $5 of cushion. 5 divided by 65 is, pretty good percent. So you have to ask yourself, okay, where's my stop going to be? And I'll take my stop. I'm not going to wait till it gets to $60. So the stop out amount should be, you aren't going to lose much. And depending on when you stop out, you may not lose at all. And then you're going to make money. Remember the 3 ways that we talked about earlier? You're going to make money by the stock moving up, because then the delta is smaller. You're going to make money by volatility contraction, and you're going to make money by time decay. So
we're going to make money.
Yeah. So what I'm getting at is, yes, I want 10%. I would like it better if it were 50 cents or 60 or 75. We put on VeriSign today. VeriSign and NTAP and IYT were all well over 10%. DRI, we got 60 cents. See, so it's just me trading, thousands of trades. That's where I've come up with these guidelines. And I'm like, wow, there's a pattern here. I'm like seeing that 10% is, for this type of stock. And if they're slugs, you aren't going to get as much. And, that's where I came up with those. Whereas just a pure mathematical option trader, would have no idea what I'm talking about. He or she would just say, well, implied volatility is high, so it has to be juicy. Well, it ain't juicy if you don't have an opinion on the pattern, because you're going to get run over by the pattern. And that's the problem that we have with option traders who don't look at charts. But, you know, if they don't want to, it's not my problem.
I just sent you, somebody sent a question there. You could probably sounds like a good one for the room. When you enter a credit spread, you enter a stop order and a target exit order with 50% less the target of the spread to close the half of the position. That was kind of difficult to read, but.
Oh, no, it makes total sense to me. So yeah, thanks for, you know, reading it. All right, let me answer that. Number one, I do like the part about always, as soon as you enter a trade, just put a good till cancel order out there in case you get a favorable move in your direction or volatility contraction, etc., that you get filled on a half lot. Or even do two orders, do a half lot at 50%, the other half, or whatever amount that you would be happy with for a quick gain. Many times we take half at 50% of max profit. Many times we don't. We're like, there's no reason to take partial profits now because the stock looks like a beautiful brand new bullish trade. And then we just let it rally some more. And then I might say, you know, trail the stop under prior day's low for half. All right, so that's number one. Yes, you can put a good till cancel order in, whether you're trading stocks or options. If, you know, whatever stocks we're in right now, we're in a couple of them. Let's take Iggy. Is it 997? Is there anything wrong for you putting a good till cancel order out at 1080 or whatever number you feel like? That's all an order is I'm authorizing the broker to take my merchandise out of my account and replenish it with this amount of money. There's nothing wrong with that at all. So number two, you put a stop order in based upon the stock price the way we teach. That's correct also. So that's very straightforward. But do not put good till cancel orders in for stops. Well, for entering new trades, I wouldn't put a good till cancel in. And I wouldn't put a good till cancel in for stops. Instead, manually put them in every day because you don't want to get triggered on the opening wide spreads, or even a gap that you might, you know, give it 30 minutes to sit through. So yeah, those were good questions. These fangs. Look at Amazon, Netflix, Facebook. Facebook, you know, was down $1.50 today. Google, Apple, they're all looking great. Other than Tesla. What happened to Tesla? Oh, that's a big old bearish engulfing. That was up $15 this morning. I mean, Apple would be a great weekly put spread. Just under today's low, or yesterday's, so, you know, today, yesterday, whatever. So the first thing I do, I look at what the strike would be. So the out of the money would be 182.50. Step two, pull up the quotes. Let's see what I'm going to get paid. And I'm looking just for Fridays. So 182.50 is only 20 cents. So Evan, does that meet my test? Or anybody? Would that be a good trade in your opinion? selling a 182 naked put on Apple, 4 days to expiration for 20 cents. No one? Regarding the discussions that we've just been having for the past 45 minutes, the answer is an overwhelming no. To sell that naked, remember I said, 1%, and I know 4 days, so you can cut it down, this and that, but that's nowhere near 1% of the strike price for starters. Number two, if you sell that naked, just roughly use 20% of the strike price as the maintenance requirement. So what's 2 times 18? 18 is 36. Let's just say 36. So if you do a 10 lot of this, your maximum gain would be $200, less commissions. Your maximum loss, well, I don't even care about maximum loss right now, but you're tying up $36,000 of capital to make 200. I just think we could, it's ridiculously small. Well, Daniel, it doesn't expire until Friday. We'll make that decision then. Oh, it's busting out again. Are you asking about rolling it now or Friday at expiration? Yeah, Greg, look at the XLU is acting bullish again.
Well, it's retesting that topping tail. Look at the hourly. I would wait till tomorrow.
Yeah. Yeah, so let's do nothing now, Daniel. But when something is deep in the money, well, two things. We're obviously managing it for the chart. So I got it in my open positions here. We review all positions, pre-market during the day. I have alarms, etc. And then secondly, in terms of rolling before expiration, we do that sometimes, particularly as an offensive roll where the stocks, like we have a covered call, for example, and it's in the short call is in the money, and we're like, hey, this thing's going higher. So I might roll the short strike from $80 to 82 just to get more time premium. Whereas this one, it wouldn't make sense for me to roll this. I mean, if you rolled it, you would get more. If you rolled it to the same strikes further out in time, yes, you would get a credit. So that's true. But if this keeps going sideways and breaking out, we might just kill it. And I don't want to be in the trade.
I think this is going up only because the market is strong today, because bonds are down. And this thing should be going. But with yields going up, it doesn't make sense that this is going up.
Right, because they're interest rate sensitive sector. But all right, so did I answer that other question fully before I got sidetracked? ITB is still a mess. ITA has conflicting tails on the top and bottom. Yeah, if you look through the markets and these sectors, the sector ETFs are still a mess. It's just we're finding good individual looking things. So we love trading ETF. Obviously, we have our ETF trader. We like trading a whole basket, less gap risk, etc. But it has to set up. And now's a time where they aren't setting up as looking clean. Look at telecom, though, Greg, as an engulfing bar. X-ray Tango Lima.
Yeah.
So yeah, this is a time where we're hunting for compelling individual stocks. Well, IYT, I mean, yeah, we gave that as a new trade today, and I'm in that one too. I wouldn't trade the stock, but, you know, engulfing, climactic buy setup, bottoming tail. That's why in the letter I called it part 2. If you get the
Brad on YouTube said, so you want the bid ask to be more narrow for a vertical put?
I'm not sure what that means. You're mixing up not you.
No, I know. I mean, you always want.
Yeah, well, that's what I was going to say.
Narrow, regardless.
That's why I'm saying there are 2 different kind of concepts going on here.
Saying that the strikes to be close together.
Oh, got it. It's reward. Okay, so number 1, always trade liquid options. I'm guilty of that just because I find so many good patterns, and I make small exceptions, but you all shouldn't make exceptions. I'll be the bad boy, because then Greg has to hear me bitch when I try to get out and they widen them even worse and I'm yelling. But number 2, no, I cannot give you a blanket rule on spread width, because they have different reward to risk ratios, profiles. But if you can get a tighter, wow, look at the market moving here right into the close. If you can, a tighter spread should give you a better return on capital, because the capital is the spread width less the credit received. So let's just say hypothetically, if you can get 30 cents on a $2 wide spread, then that's 15%, as opposed to getting 50 cents on a $5 wide. That's only 10%. But you're getting 15 cents a share less than I am, but I have more capital on the line, and I have a greater risk if it gaps against me, and it's a greater margin.
Yes, so vertical credit spread.
Yeah, correct. Yeah. So we do them both. Ours range from $1 wide, typically to 10 is the max, but I pretty much keep them 1 to 5 are the most popular. Even, well, our XLU being $1 wide was actually an exception also. I would say our sweet spot is, 3 to 5 wide. We do 10s. I think I did IYT, I did $5 wide, even though I was considering. I was talking to folks in the green room earlier, and we were analyzing it together. We could have got, and here I remember the discussion. So we did a $5 wide on IYT. We sold the 180 puts. Yeah, Greg, if you don't mind pulling up IYT. So a 180 put, and I'll just use closing value right now, is $8 out of the money. So that's pretty good cushion. And we did $5 wide, and we took in it's 53 cents a share. That's what I got filled, and that's what I sent the recommendation out. We were comparing that to, because I was like, wow, I was searching for a way to try to get paid more than 50 cents, 53 cents a share. So I was just experimenting, and I tried doing the 182 and then the 172. So same expiration in July. So I went $2 higher in strike, tighter, and I went $10 wide instead of 5. And we could have got $1.10. And so I don't know if you were there at the time, whatever, but I was asking the folks in the green room, because I do that on purpose, you know, try to make things a group educational discussion. I said, which one of these trades do you like better? There's not a perfect answer. I mean, the stop is the same under either trade, but it's what I just said. There's different risk to reward profile. And profile, what I mean by that is how you're making or losing money over time into expiration, depending on what the stock does. And you would have to pull up on your platform what they call a risk graph. And you just plot the two, and is what it is. And whichever one fits your trading plan better. But if you did a 10 lot, the potential gain would be $1,100 versus 530. You have more, the wider spread, had less of a cushion, had more capital required at your brokerage firm. And if you get a catastrophic gap, you're going to have more pain. Those are the downsides to trying to make your $1,100. Or would you rather make $500, have $2 more cushion, and less risk on a catastrophic gap? And since I love my cushion, you know, I mean, my stop's the same, but if I have a further out of the money short strike, regardless of where my stop is, I'm losing less by definition because it's further out of the money. So that was our analysis, and we opted for the more cushion, more conservative of those two. But I you know, I remember saying either one's fine. In fact, I think I did a small lot in both of them. All right, well, those were some good discussions into the close and good scanning. We have a bunch of stocks. Hey, look at our T2. I was about to say Tito's, but that's a vodka, right? Look at T2, TTWO. That was one of our trades in the letter. That was nice. Up $1.51. And see that when I gave an entry, this one worked perfect. And here's what I mean by that. I gave the entry over the hourly resistance, not Friday's high like I did in many other things. And I see where it triggered. And then we had to, on that pullback, we got our limit entry. So that's an open trade now. And our Intel, we're short the 48.5 naked puts. And that's up nicely, 44 cents today. So that was a good reversal. I'm in all three of these trades, all four of these that I gave you all today, this afternoon, whatever. IYT, DRI, VeriSign, and NTAP. I took all four of them. And you know, that's just another comment, Greg. You know what? We never talk about that. Maybe it's just because it's common sense to us. But when you're out there searching for an educator, I mean, you better find one. I mean, we could do a whole discussion on this, Greg, write a whole article. How do you find a trusted advisor? And it applies to anything, but let's just keep it to trading, education. Well, you want them competent, you want them experienced, you want them ethical, you don't want them selling you crap just to put money in their pocket. You want them has battle scars. You know, Greg and I have seen so much that, you know, throw it at us. We'll tell you what to do. But finally, the part that I'm leading up to is if you don't have an educator that trades their own accounts and they just sit there and talk blah, blah, blah all day long, that would be like me, you know, private pilot, going to an instructor who's, you know, who crashed his plane 15 times. It's like, are you crazy? Yes, I've crashed my account, you know, learning before I knew how to read technical analysis. That's part of the seasoning process. But if you know, there was this one educator, I forgot who it was, Greg, but it was in Orange County. And I don't know where I saw him, whatever, it doesn't matter. But I watched this guy, he put on a trade, and his right hand on the mouse was shaking because he was so nervous that he was in a trade. He didn't know what to do. And I'm looking at myself and the people around, says, is this a joke? You want me to learn from this guy? Maybe it was at a trade show. I don't remember. It was so long ago. Hey, look at that. Good job on that.
Yeah, and look at XLRE that I have up here, how it pulled back. XLU, I don't know whether that's some manipulation, but that is out of whack. That is going up. And you look at the reaction that's supposed to react this way with bonds moving down, interest rates up. This is supposed to pull in, and it did. And XLU going up.
Wait. No, but you were having me scratching my head there because you said the inverse, but no, XLRE is real estate. Wait, I'm confused. Start over.
They're REITs.
Right. That's so. Oh, okay. All right, I'm following now.
All right. So they're very interest rate sensitive.
Right, but they're still fundamentals. One, you got a big, brick building that's producing electricity, and the other one is, homes and all. So I understand.
It's the reaction that happens,
right.
Because it's like, okay, this REIT pays me X percent, interest rates start going up. So right away, somebody's going to think, this is going to lose value. They sell it. And these are exactly the same. And now, but utilities are at the high of the day. So there's a lie going on here. And if bonds are down tomorrow, and this should be gapping down.
Good, I hope so.
Well, that is what should happen. This should be down, and it's not, but it should have reacted just like this because they typically move together. I don't know why, but they're not. But, we'll see tomorrow.
All right. All right. Any questions? Anybody? Green room, cyberspace, office manager, anybody?
Someone asking, can you explain the pluses and minuses of trading ETFs versus indices like spiders versus SPX? Well, you can't trade SPX.
Well, sure you can.
Well,
it's a big
trade the cash market.
Well, right.
I'm not asking about options. Right.
Let's not talk about futures. Yeah, I think he was just talking about spiders. It's a no-brainer difference, and we have actually just give them, Greg, go to our website or give them the link. We have a beautiful page on our website answering that. It's like this was a perfect lead-in question, but I'll verbally give it to you. Yeah, it's our new ETF trader, and all of the reasons are right there in pretty pictures and colors and drop downs and. But the easy answer is, and it's also what I just was talking about when I went through my ETFs here 15 minutes ago, that ETFs, the benefit is you're trading a whole basket of stocks with one click. You can also trade international markets, countries, commodities, currencies, all through ETFs. The energies and metals, of course, the different sectors. So when we get bullish or bearish on something, we trade them all the time. We were in the transports today. We're in the IYT. We just talked about, I traded the spiders. We sell put and call spreads on the aerospace sector. When that was getting toppy, we sold a call spread. We're stocking the ITB home building sectors for bottoming on the weekly. And so the only disadvantage of them is what I was talking about, which is I look at my ETFs throughout the day because that's telling me where is opportunity shaping up, either for the long or short side. And then if I like the ETF, we'll trade that. And if I don't, we go hunting for members of that family. And that's what we were doing for the last 90 minutes with Greg's screens here. And I wrote down, over 15 of them here, 20. And so we have tons of opportunity right now for these short-term, either stock or option income trades. But our ETF trader, for longer term or shorter term, there's nothing jumping out at us right yet. But we swing trade and core trade ETFs. We love them. In fact, Greg in the video is still talking about sugar. Or was it corn? Corn. Sugar.
Alert didn't go off yet. Anyway,
Yeah.
Dan, the fella in YouTube is asking trading options on Spider versus SPX.
Yeah. We do it almost daily.
Well, no, we don't. We trade the Spider options. So he's asking why trade one versus the other.
Oh, I thought he was saying why not trade just spiders. The reason we don't like SPX options is all it is more levered, and the spreads are not anywhere as conducive because they're just spreadier. So that's the simple answer. Spiders are so liquid, and the spiders offer multiple expirations during the week. And, we do have one individual in our green room that trades them, and he's very experienced. So, that's just his desire. And, I'm not quite sure why he does it other than leverage. Because you can tie up a 10x lever. Well, it's not levered. That's the wrong term. It's just the value of the SPX is a big number. The Spiders SPY is actually a diluted version of the SPX. It's 1/10 of it. So he's just trading the big boy contract, and that's fine. But our options on the SPY, I like the spreads better. I like they're liquid. I like the multiple expirations. So that's the answer.
All right, Dan, I'm on overtime now.
I know, me too.
Your bicycle's calling.
It is. It's making noise. So you forget about me.
If you had a wife, she'd be jealous of the bicycle.
Without a doubt. That's for sure.
All right.
Yeah, I don't know do you know downtown Lauderdale, Greg? They have
I've only been there. I think one time I went to the boat show.
Oh, the boardwalk downtown is just spectacular. So yeah, my bike ride is I hit the beach, and then on the way home I hit the boardwalk, and it's
it was very nice, very nice. Much nicer than South Beach. I mean, South Beach doesn't have a boardwalk, but Fort Lauderdale, the boardwalk was very, very nice.
Yeah. All right. Well, everyone have a great night. So we have, we're still bullish here. We're finding great stock and option trades, and holiday week, I think the daily charts, it's not all in, they're still a mess, but it's just Greg is doing as he always does, a fantastic job scanning through with his wonderful telecharts here and just finding terrific opportunity for us. So I have a big list here, and we'll probably put some of these in tonight's letter. If you want, Greg, we can talk about them later.
I'm just answering a question in here. You know, I mean, some days it's very difficult to find things. Today was, you know, a breeze. Could have found a ton of stuff, but how many things can we, you know?
Right. Yeah, exactly. All right. So everyone have a great night. Thanks for the, you know, the input. We're glad to help everyone, and we'll see you tomorrow.
Okay.